Hi everyone, it's Peter Schiff. It is Wednesday, October 6th, 2010. Well, another record high for the price of gold. And, I haven't blogged for 3 days. I blogged on Friday. Well, it was a record high on Monday, a record high on Tuesday, and another record high today. I guess it's getting to sound like a broken record, but that's probably going to be a very familiar refrain on this blog going forward. Yesterday was a surge. Gold was up $25. I think it added almost another $10 today. Silver again, a new 30-year high. It's about $22 and change an ounce. It's not a record high yet. It needs to get up to $50, but I'm confident it will. It's probably not going to do it this year. It's got a shot of doing it next year, though. And ultimately, I think it's going a lot higher than 50. We had a new record high today in the Swiss franc. I think that currency is going to continue to make new records. We had new 52-week highs today in the Australian and New Zealand dollars. The Japanese yen hit a new 15-year high. That's despite that massive intervention by the Bank of Japan to weaken the yen a couple of weeks ago. The yen has rallied back and made a new 15-year high. The euro continues to surge. It's not at a new high for the year or a 52-week high, but give it time, it will make a new high. I am certain of that. We got a lot more news, I think, yesterday morning or Tuesday morning, Monday night, Tuesday morning, from Japan that they cut their interest rates from 0.1% to a range between 0 and 0.1%. Like that really makes much of a difference, but they also announced more quantitative easing. I forget the exact dollar amount. It was 30, 40, 50, 60 billion, I forget. But what was interesting is they said that not only are they going to buy Japanese government bonds, but they're going to buy real estate trusts and ETFs that own stocks. I mean, they're really, pulling out the heavy artillery in this currency war. And, more and more, I wrote in my article, I wrote in my newsletter. If you didn't get your copy of my latest newsletter, make sure and sign up for it at Europac.net. But I wrote an article about the currency war. And, most wars, the object is to kill the enemy. Well, in the currency war, the object is to kill your own troops. Because in a currency war, it's a nation's own citizens that suffer because they're the ones that are being made poor. Well, of course, unfortunately, America is going to win the currency war, so our citizens have the most to lose because we're going to be the greatest casualties in the currency war. It's going to be American retirees, people living on fixed incomes, because unfortunately, that's how you win the currency war. Whichever country succeeds in making its citizens the poorest is the winner. So this is going to continue. We also got more bad economic news this morning. We got the ADP came out with their job estimates, and they forecast that we're going to lose about 40,000 jobs last month. And the big problem is a lot of those jobs were in manufacturing, goods production. We added some service sector jobs, but the problem is if we're going to export, which we need to do, we got to export things that we make. We can't export these services. So the fact that we lost all these good producing jobs, these are exactly the types of jobs we need to be creating, yet we're still hemorrhaging these jobs because the government is continuing to impose regulations and taxes that make productive employment impossible. And you still have people on television. I'm watching on CNBC. They're still clinging to this idea that no matter what the news is, it's bullish for stocks. If we get good economic news, well, it's bullish for stocks because the economy is going to improve. If we get bad economic news, well, that's bullish for stocks because the Fed's going to come to the rescue with quantitative easing, and that's going to make the economy improve, which is bullish for stocks. Well, they got it half right, right? Quantitative easing will not work in that it will not fix the economy. It will not create jobs. It will not create economic growth or prosperity. It will create inflation. And inflation is good for stocks in the sense that it makes nominal stock prices rise. So the real reason stocks go down on bad news is not because the Fed's going to come in and fix the economy. It's because the Fed's fix is going to make the economy worse, but it's going to destroy the dollar, and therefore owning stocks makes more sense than owning dollars. So it's really a flight from the dollar that you get when you get bad economic news because more people figure out what bad economic news really means. And the scary part is the worse the economy gets, the more the Fed's going to do the quantitative easing to fix it, which means the more damage it's going to do, the worse the economy is going to get, which means more easing, and it's a self-perpetuating spiral that destroys the dollar. And it's amazing too that you look at with gold making new highs. A lot of people are buying gold, and they still don't understand why. I was watching this guy on CNBC who was buying gold. He was, I guess, he was a fund manager, and he was buying gold for his clients, and he was explaining why he was doing it. And he said, well, gold is no longer just a hedge against inflation. So obviously there's no inflation, so we're not buying it because of inflation. He said we're buying gold as a hedge against a weakening dollar. I couldn't even believe the guy said that. I mean, that's a distinction without a difference. What does he think inflation is? It's the dollar losing value. It's two sides to the same coin. I mean, the reason that prices rise is because the dollar has less value. And when the dollar loses value, you need more dollars to buy things. People raise their prices to compensate for the diminished value of the dollar. So here you've got a guy who's buying gold because he thinks the dollar is going to lose value, but he's not worried about inflation. I mean, it shows you the complete ignorance out there on the part of the investing public about inflation, about what it really is, and the victory of the government's propaganda campaign to convince everybody that there's no inflation. Because here you have people buying gold, and they're just assuming there's no inflation, but they're trying to rationalize why they're buying it for some other reason, because, of course, everybody knows there's no inflation. There is inflation. That's all there is. I saw in his blog, my friend Paul Krugman, and it's not necessarily my friend because I've never actually spoken to a guy. I have challenged him publicly to several debates. I've even said he can bring along his Nobel Prize for moral support. And, I don't even, in fact, if they offered me a Nobel Prize personally, I don't even think I'd accept it until Paul Krugman returned his. I joked before that they should be calling him back and asking him to send that Nobel Prize back, because obviously, he shouldn't have one. I mean, if you can get a Nobel Prize for excellence in economics, if you have one and you say something that's so ridiculous, you should be required to return it. But anyway, he apparently, a lot of people send Paul Krugman emails about me. Peter Schiff was right. You should listen to Peter Schiff. So he always, once in a while, he likes to take a jab at me. And in his most recent blog, he said, well, how's that hyperinflation thing going? Like, Peter Schiff's not always right because he said we'd have hyperinflation. I did say we'd have hyperinflation, and we're going to have hyperinflation. I didn't say we were going to have hyperinflation in 2010. What I'm saying is if we continue to do what we're doing, then hyperinflation is what we're going to have. There's the only way to avoid hyperinflation is to reverse policy, to reverse monetary policy and fiscal policy. Right now, there's no sign that we're going to do that. So hyperinflation is what we're going to get. Now, I still maintain that it's a worst-case scenario. I'm not saying that it's 100% probability. There is a good chance that we will come to our senses before it's too late, that we will, change the course before we go over this cliff. But the longer we wait to do it, the more painful it's going to be for the country. That is the problem. So the longer we wait, the less likely we are to do the right thing, because doing the right thing is going to involve so much pain, and it's going to cause our leaders in the Fed and in Congress to actually have to fess up and describe how bad the country is, and that they were the source of the problems, and how difficult it's now going to be to dig our way out of this hole that bad Fed policy and bad fiscal and regulatory policy dug us into. And of course, I'm doing this video blog from a hotel room in Miami. I'm on my way from Belize to Anguilla because I'm setting up a foreign business, because it's so difficult for me to grow my business in America. There's so many regulations that cost so much to comply with, and a secondary, the taxes, that I'm going offshore. I'm setting up a business offshore to do brokerage, to do asset management, to do research, to do investment banking. These are things that I'd much rather do in America, but I can't. So I'm going to do them offshore. And, the next 100 people I hire, they're not going to be living in America. They may be Americans, but if they want these jobs, they're going to have to leave the country to take them. I would prefer to keep investing in building my business in America, hiring people in America, but unfortunately the government is making it too difficult, or in fact impossible for me to do that, so I have no choice. I have to move offshore. Now, I'm not shutting down my domestic business, but it's not going to grow. It's going to grow offshore. And the problem is a lot of other businessmen just like me are doing the exact same thing. Anyway, take care. Bye-bye.